The US will default this summer, coming to a theater near you. That's right, that's what they're saying. The US is going to default. They're not going to be able to pay their bills. The debt has risen too high. It's hit the ceiling. Oh no. What are we going to do? Let's be honest here. We've seen this before. We've seen it before that, and we've even seen it before that. And time again, the same thing happens. They get to a point at which the government agrees, let's spend a whole bunch more money. Well, that's happening again today. Let's look at it. The US will default this summer unless Congress raises the debt limit according to the CBO. This is the Congressional Budget Office. They issued a new estimate of how long the Treasury Department can sustain its extraordinary measures to prevent a debt default, 5 to 8 more months. So again, yes, they will default, but that's if they don't raise the debt ceiling. And we gotta be honest here. Do you really think they're not gonna raise it? They can start shutting down parts of the government. Maybe that's a good thing. It's funny, I heard someone say, the government leaves for 3 weeks and everything keeps running. Well, that's what happens with Congress all the time, and nobody seems to mind in a sense. It's so interesting to look at this because it happens all the time. They never agree. Then at the very last second, there's a bill that comes through. It's 2,000 pages. It's 4,000 pages. It's got a whole bunch of stuff. It shouldn't be in there. It's being passed. It's being put through. Nobody's able to read it. It is impossible. And so they make it happen. And special interests always win. The middle class loses. That's what's happening again today. If Congress does not pass a debt ceiling increase before these measures are exhausted, the government will have to delay certain payments, default on its debt, or both. It all depends, of course, on so many factors. Is the economy suddenly going to do much better? Is it going to get worse? Like, where are we at right now? Many people say that we are in a recession based on certain metrics. Others say, no, that's not the case. That's outdated. We shouldn't look at that because that would, of course, be a really bad thing. You can look at it for yourself and decide what you want. I mean, does it matter if they claim it's a recession? No, it's really dependent on you. Do you have enough income? Are you able to pay your bills? Is your job still in order? And what's it going to be like 6 months from now? Look at the data. Look at what it shows. USA, sovereign credit risk. As soon as that debt ceiling talk started coming out, oh my goodness, we ended up at these levels we hadn't seen since. Number one, the financial crisis. Looking back in 2011, you remember, we had a big problem, 2011, 2013. Is that the taper tantrum, perhaps? These things have happened, okay? It's not the first time. And so we're getting to a point at which we got to realize, how far do we, this is just, it's just a game. It's just a puppet show. And why don't they just fix it up right now? Why get to this point and then squeeze it through at the absolute last second? We go through this all the time, and unfortunately people end up losing as a result of it. You've seen this chart before, I'm sure. Federal debt held by the public, bringing it to the present, and then where they project it to go. And it's always the same thing, and it shows how extreme the debt will become. And you hear this all the time. You hear, it doesn't really matter how much debt there is as long as it's manageable. And I guess to a degree you can say that's okay, but it's not manageable. In fact, we're way gone. If you look at the unfunded liabilities, by some measurements, $181 trillion. I've seen all kinds, but it doesn't matter. It's just not payable. Right now, even you don't even include the unfunded liabilities. It's not payable. And the US doesn't have an intention on paying it all back. That's a fact. But when you look at the ability to pay off its debt, it's all really dependent on whether the currency itself is still going to have the name, the backing that it does right now. Maybe you look back at that, or let's say forward in a few years, and you realize that the US dollar ain't what it used to be. We'll see. Other currencies are starting to look a little bit more attractive, and when you see this in terms of total foreign reserves, right now the US dollar is down to 59% of the total for foreign reserves. That number could continue to drop, and other currencies can kind of be lifted up. Not going to happen overnight. We know that. We know that is the case. But when I look at this here, the amount of debt, one aspect that just needs to be understood here is they can always pay it back. In fact, Alan Greenspan said that exact thing. He said, we'll never default because we can always pay it back by printing more money. And that's what they're doing. That's what they'll do. Your currency, you work so hard for your money. Every single day you're driving in that traffic. You work hard, your boss is giving you this, the customer's giving you that. You drive home in that traffic again. You come home, you just to get that couple hours a day, and then all of that money that you work so hard for and all the nonsense that you have to deal with, they're devaluing it every single day. Every single day, these people. And they do it on purpose. That's what a lot of people don't get. I hope you appreciate that. I'm not trying to rant. This is all the data. This is all the facts. I've looked into the history. I've seen it throughout the cycles. I've seen it around the world as well. They all do the same thing. S&P 500 haters now make enough in treasuries to bid stocks farewell. 6-month treasury bill is nearly equal with the S&P 500 payout. It's incredible to see what's going on with US debt. You can see that it's at 5%. Imagine taking on this so-called, they call it, so-called guaranteed asset, where you're going to get paid 5%. Do you trust that the government will still be able to pay its bills in 6 months? Well, maybe not according to the CBO, but if you think so, maybe they'll print some more money. Then 5% guaranteed. What's going to happen with the stock market? Hard to tell, right? What's going to happen in a 6-month time frame? Do you think it's going to be able to elevate by 5%? Maybe it's 3%, maybe it's down 5%, who knows? But with the treasuries, you're going to be able to get 5%. It's interesting. We don't see this too often. In fact, the last time was 2007. 2007, big stuff happening right now today in the US debt. In fact, if you look at the net foreign purchases of US equity, that has increased. That means foreigners are buying up US shares. And then you look at the treasury holdings by foreigners, they've been buying that up for basically the last year. They've been buying into that. So they're buying more US debt. They're getting a great return from that. And despite the exchange rate, which obviously not very favorable for other countries, they want their money somewhere where they can get a return. So US dollars are looking very attractive here. Monthly change, this treasury holdings of foreign private investors. That's where it's coming from. Okay, it's not the official institutions and so on. This is coming from private investors, foreign private investors. That's where the money is coming from right now. They probably want that 5%, so they're pouring their money in. We have a breakdown showing us that China sells off, but Belgium and Luxembourg, obviously just hedge funds, companies like this, they use Belgium, they use Luxembourg because that's where their offices are located. They're probably not from there at all. They're buying in more. So you could see that, right? The private hands putting money into the US dollar. China has been selling off. They've been selling off for several years now, and we've noticed the fact that, this has declined from well over $1 trillion. At one point, I believe it was 1.3 trillion. It has come down since, and they've been selling off regularly since 2021, and it is now down to $867 billion. Still a huge number, but that has come down quite a bit, and they seem to be wanting to get rid of that. In addition, we can look at the gold reserves for the whole world, and that has been trending upward. So a lot of these emerging markets, they are purchasing, when you look at it, they are purchasing gold versus US dollar. Part of that is that the exchange rate not favorable to them right now, but at the same time, they have to keep some of their capital somewhere. And to them, they might be thinking, you know what, why keep it in US dollars? They're sanctioning us. They're making it difficult to use their SWIFT system. They're doing all these things to us. We don't want part of that. We want to lessen our dependence. Yeah, we'll still own some, but we're going to pull back on that. That's been happening for a little while, and we see that occurring. Well, let me show you one last thing. I thought it was interesting. Berkshire Hathaway, okay, we're talking about Warren Buffett here, sheds most of its stake in chip maker TSMC. Sale represents an unusually abrupt change for Warren Buffett's firm. Warren Buffett, Berkshire, they don't do too many sales, and they really don't do too many purchases either. Like, so when they make a purchase, they usually go all in, they do it big, then they increase their stake later on, and the same goes with the sales. I mean, you can see that right now. TSMC, one of the most important companies, in my opinion, in the world, maybe they believe something bad is going to happen between China and Taiwan. That's the way I perceive it, but it could be anything. Maybe they just don't see value coming out of there. Taiwan Semiconductor shares drop after Buffett reveals stake sale. So I think the stock came down about 5% or so. It just shows us that even a company that's so strong like this, so important, so integral, it could still go down. So that's the information I wanted to bring to you today. A lot, when you look at what's happening with US debt and the ability to pay back, they can always do that, but they have to devalue their currency. So if you believe, this is my takeaway, oh, you waited until the end of the video, thank you for being here. If you believe the debt will rise, seems likely, how are they going to be able to pay that back? By devaluing the currency. If they devalue the currency, that means you as a saver are going to be screwed over. Inflation will stay up and elevated. That also means that interest rates might remain higher for longer, and that means you have to be very cautious about your investments. This is very important. If you want more detail on that, please let me know. I'm always checking the comments. You have to let me know in the comments below. What do you think is going to happen to the US debt? Will it become confetti? Let me know in the comments below. And as always, I'll see you tomorrow. Take care.